All right, Mr. Button, I got a crazy idea. I'm moving to the United States, land of the free, home of the tax deductions. No more GST, no more HST, just straight up freedom.
Oh boy, are you sure you're ready for the tax surprises that come with that?
What's the big deal? You just move, find a job, eat barbecue, and live the American dream, right?
Not so fast, Boomer. The US tax system isn't exactly the Wild West. It's more like a giant maze, with penalties waiting at every wrong turn.
Uh-oh. Time to unpack my bags and listen up.
First, you need to figure out if you'll be a US tax resident. The US determines this using the substantial presence test. If you spend 183 days or more in the US during a calendar year, you're a tax resident. But it's not just this year's days that count. They also count 1/30 of the days from last year and 1/6 of the days from 2 years ago.
Hold on. So if I visit for more than 120 days a year for 3 years, I could be a tax resident?
Maybe. If you are from a country where Uncle Sam hasn't signed a tax treaty, basically no treats for you, you won all expenses paid membership to the US tax system. That means you'll be taxed in the US on your worldwide income, just like a US citizen.
Wow. The IRS is that friend who crashes your party just to count the chips, because they want a piece of every crumb.
If you become a US tax resident, you'll have to file a tax return with the IRS. The US uses a progressive tax system, meaning the more you earn, the more you pay. Here are the 2025 US federal tax brackets, and updated every year, up to 37% for high earners.
Yikes! So if I make a lot, I pay a lot?
Boomer, think of progressive tax brackets like an all-you-can-eat chili dog contest. Your first chili dogs, dollars, are taxed at low rate, but the more you eat, earn, the higher the tax on the next ones, until you hit the maximum rate, or regret eating that much. But wait, there is more.
In the US, you don't just pay federal tax, you might also pay state and local taxes. Some states have no state income tax, like Texas, Florida, and Nevada. Other states, like California and New York, have high state income taxes, up to 13.3%.
So if I move to California, I could pay over 50% of my income in taxes?
It's possible. That's why where you live matters.
All right, scratch that. Texas, here I come.
Once you're considered a US tax resident, you must report all your income, no matter where it comes from. Rental income in Canada, taxable. Side gig paying you in maple syrup, also taxable.
Now let's talk about something most newcomers don't know. If you have foreign bank accounts or investments, the IRS wants to know about them. If you have more than $10,000 in foreign accounts, you must file an FBAR, Foreign Bank Account Report. If you have over $50,000 in foreign assets, single, and you live in the US, you may also need to file under FATCA, Foreign Account Tax Compliance Act.
10 grand total? That's like a few truck repairs and a good chili dog fund.
Well, the IRS doesn't care what it's for. If you don't report it, the penalties are massive, up to $10,000 per violation.
All right, I'll just keep my money under my mattress.
Nice try. The IRS would still find a way to tax it.
If you work in the US, your paycheck will have deductions for Social Security, which helps fund retirement benefits, and Medicare. This helps pay for healthcare when you're older. Your employer also matches these amounts, so it adds up fast.
So that's over 7.5% gone before I even see my paycheck?
Yep, and if you're self-employed, you pay both shares, a whopping 15.3%.
Remind me, why people move to the US again?
Not all bad news. Many newcomers get tax refunds thanks to standard deduction, $15,000 for 2025, which reduces taxable income, and tax credits, like the Earned Income Tax Credit or Child Tax Credit if you have kids.
So, there's hope for a refund?
Possibly, but make sure to file correctly, or the IRS might hold your money hostage. If you leave the US, you might need to file a dual status tax return for your last year. Also, if you renounce US tax residency, you might be subject to an exit tax if you have high income or assets.
So even leaving the US has a tax bill?
That's the American way. And it doesn't stop there. If you own or have a stake in certain foreign accounts or businesses, you get even more tax forms. Form 3520. If you receive large foreign gifts or have an interest in a foreign trust, you must report it or face hefty penalties. Form 5471. If you own 10% or more of a foreign corporation, congrats. You now have an IRS homework assignment that makes college calculus look easy. Form 8621. Own shares in foreign mutual funds or ETFs. The IRS treats them as passive foreign investment companies, PIFICs. And the paperwork is brutal.
So let me get this straight. If I move to the US, not only do I gotta pay taxes on everything, but now I also gotta fill out a stack of paperwork just for existing?
Pretty much. And if you don't file these forms, expect penalties bigger than what you'd owe in taxes.
Can I just stay in Canada and pretend I moved? No forms required, right? Wait a minute, Mr. Button. You told me earlier that I'm an American. Accidental, sure, but still a citizen. So, does all this apply to me too?
Boomer, you just opened a whole new can of worms.
Oh boy, so what's the difference?
Because you were born in the US, you're a US citizen for life, unless you formally renounce it. That means, even if you never lived there, never worked there, and don't even vote, the IRS still considers you a taxpayer.
So, I have to file US taxes even if I never move there?
Yep. As a US citizen, you're taxed on your worldwide income, no matter where you live. That's called citizenship-based taxation. And the US is one of only 2 countries that do it. The other one is Eritrea.
Wait. So if I don't file, the IRS can come after me?
Potentially, but don't panic. There are some ways to fix it, like the streamlined foreign offshore procedure. That helps accidental Americans like you catch up on filings without massive penalties.
Okay, that's good, I guess. But what if I don't want to be a US citizen anymore?
Then you'd have to renounce your US citizenship at an embassy or consulate. But that's a whole other process. And it comes with a potential exit tax if you have too many assets.
So basically, being an American is just one big tax headache?
Pretty much. But hey, at least now you know what you're dealing with.
You know what, Mr. Button? I think I'll just stay in Canada. No forms required, right?
Nice try. But the IRS is very good at finding people. Just ask accidental Americans.
Okay, so, moving to the US isn't just about packing a suitcase. We have to think about worldwide income, bank accounts, investments, businesses, and even gifts.
Exactly. And that's why someone decides to move to US. They need to talk to a tax professional before the IRS talks to them.
I thought moving to the US meant more freedom, not more forms.
Welcome to America, Boomer, land of the free, and home of the most complicated tax system in the world.
All right, fine. But if I have to fill out one more form, I'm running for president to change the tax code.
That's not how that works, but good luck with that. Thinking of moving to the US? Make sure you know what you're getting into. Like, subscribe, and drop your tax questions in the comments. See you next episode.